Hold your breath, folks. Something explosive is set to go down on Wall Street, and it's not a financial apocalypse. Instead, it's a financial fireworks display that could light up the sky, albeit metaphorically. Picture this. NVIDIA, a name that makes tech giants like Microsoft and Amazon drool, is about to report its earnings for the fiscal 2025 second quarter on August 28th. The stakes are staggeringly high. NVIDIA stock has skyrocketed 187% over the past year alone, making it an irresistible headline grabber. But what if this upcoming earnings report is even bigger than an anticipated Federal Reserve rate cut? Yes, you heard it right. With a Federal Reserve meeting scheduled for September and a predicted interest rate cut hanging in the balance, one would think Wall Street would keep its eyes glued on the Fed. Hello everyone and welcome back to Investocracy.
Well, we can't get to the next tech earnings season before we get out of this one, and we still have to consider NVIDIA a week from today. How do you see that?
I mean, it's huge, obviously. It's the most important stock in the world right now. So, if they laid an egg, it would be a major problem for the whole market. I don't think they will. I think they're going to surprise to the upside. If you look ahead at sort of what Wall Street is counting on a go-forward basis, it's almost like this explosion of AI revenue that they've seen over the last year and a half, is going to just sort of dry up. And I just don't think that's the case. Eric Schmidt gave a talk at Stanford recently. It was sort of leaked a few days ago, and they took it down off of YouTube because he made some critical comments about the work culture of Google. But embedded within that talk, one of his throwaway lines was, in talking to Sam Altman, they said that together they both believe that each of the hyperscalers, plus the OpenAIs of the world, we're probably going to have to spend something like $300 billion in NVIDIA chips over the next few years, each, $300 billion each. So, NVIDIA could basically only supply those hyperscalers, and their order book is going to be full for the next 4 years.
Not so fast, say industry pundits. Instead, all eyes are locked on NVIDIA. Why? Because this isn't just another earnings report. It could very well be a market-altering event. From designing the crème de la crème of GPUs to navigating an ocean of AI advancements, NVIDIA has taken up a towering position in the tech stock arena. So grab your popcorn. This is one financial roller coaster you won't want to miss. Picture the stock market as a grand stage with its actors, the companies, playing out dramatic scenes. NVIDIA, right now, is the actor in the spotlight, giving a performance that could redefine the tech sector's financial theater. It's as if Wall Street can't catch its breath, awaiting the company's fiscal 2025 Q2 earnings report due on August 28th. Think of it as waiting for the grand finale of a blockbuster movie, a moment of reckoning. NVIDIA's trajectory has been nothing short of phenomenal. The company's genius lies in its graphics processing units, GPUs, a technology originally rooted in improving gaming graphics. Over time, NVIDIA's GPUs found themselves at the center of a revolution, critical for performing calculations in parallel. This translates into utility across an array of industries: engineering, drug discovery, and, the hottest one of them all, artificial intelligence, AI. If NVIDIA's rise were a Hollywood script, its GPUs would be the versatile hero, saving the day in every possible scene. But what makes this earnings report a nail-biting cliffhanger? It's the mountain of expectations, of course. But before we go through it, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
But I also know that we are up big, that last week it seemed odd. I mean, for instance, we made a lot of chatter about NVIDIA. Now, NVIDIA reports next week, and somehow NVIDIA is, as David would ask me, it's the key to the market. Now, it shouldn't be. I mean, there is an absolutely terrific piece we've got about Google, where Google is up 7,661% since it came public on today, August 9th, August 19th. And what I say to myself is, okay, do I really like NVIDIA? Do I just judge it by next Wednesday? Or do we look at the body of work of NVIDIA? Somewhat like Olivier. We look at the body of work. We don't just look at his final, is it safe? Not that he was bad there. I think that we have to remember that the great wealth is created by not reacting to a given month.
Right.
NVIDIA has projected $28 billion in revenue for its Q2, a significant leap from its $13.5 billion reported last year. That's an astonishing 107% year-on-year growth, enough to make any seasoned investor's head spin. Prolific Wall Street analyst Ben Reitzes of Melius Research adds to the crescendo. He believes NVIDIA stock could soar to $160 per share, carrying a substantial 23% upside. This isn't speculative fluff. This is based on cold, hard statistics and trends, the kind that make financial headlines sizzle. NVIDIA CEO Jensen Huang visualizes a trillion-dollar upgrade and expansion spree by data center operators over the next 5 years. Microsoft, Amazon, Alphabet, you name it, are all part of this colossal expenditure. They're not just buying NVIDIA GPUs, they are investing in the computing power of the future. The H100 graphics processor has set industry benchmarks, but brace yourself. The H200 and the next-gen Blackwell architecture chips are in the pipeline. These new offerings promise AI inference speeds that will put today's technology on the slow track. Faster chips equal time and cost savings, making NVIDIA's tech an irresistible buy. Consistency and exceeding expectations have become part of NVIDIA's corporate DNA. In the fiscal 2025 first quarter, NVIDIA didn't just meet its revenue guidance of $24 billion. It reported $26 billion. Analysts had estimated $24.6 billion, so you can imagine the celebratory cheers on Wall Street. The data center segment alone contributed $22.6 billion, a whopping 427% increase from the previous year. The upcoming Q2 report? Investors are especially hawk-eyed about the data center revenue figure. Anything north of Wall Street's $25 billion estimate will signal robust AI infrastructure spending by giants like Microsoft, Amazon, and Alphabet. But that's not all of it, so let's keep rolling.
Over the last couple days, I've been asking strategists about the rally that we've seen in tech and the rally that we've seen in NVIDIA, and if that is supposed to be worrisome again, right? We've had a lot of conversations over the past year about, well, this rally is only happening in tech. It's 7 stocks leading the stock market higher. That's not a reason to be bullish. That's not a reason to be positive on the current rally. But what strategists are pointing out is that it's more than just tech that has been rallying. Yes, tech has led us from that August 5th bottom, but if you go back over the last month, a lot of stocks have been doing quite well. So our friend Kevin Gordon over at Charles Schwab highlighted a chart to me showing that about 58% of companies in the S&P 500 have been outperforming the index over the last rolling 2 months. This is the highest level that we've seen in the last 2 years. So you can see that big tick up that you see at the end of your screen on that chart. That was the amount of companies outperforming the S&P ticking up over that last month. Another interesting chart that our friend Brian Belsky over at BMO Capital Markets highlighted that was interesting to see is for the first time in about 2 years, you're looking at the rest of the index, not the Magnificent Seven, not the NVIDIA'S, Alphabet's, Apple's of the world, actually outperforming the Mag 7 this quarter thus far. Largely what this tells strategists is this is a healthy bull market. This is what you want to see confidence that stocks are going to continue to chug higher.
Now, some numbers rattle nerves rather than calm them. NVIDIA's astonishing rise has raised questions about its sustainability. Trading at nearly 46 times forward earnings estimates, the stock appears to have lots of growth already baked in. This means NVIDIA must deliver stellar Q2 results and jaw-dropping Q3 guidance to keep its lofty valuations justified. Here's an ironical twist for you. Lower interest rates, which generally buoy stock markets, could dampen NVIDIA's already surging stock price, simply because a lot of good news is already reflected in current valuations. A rate cut would typically shift investments to assets like stocks and real estate. Still, analysts like Reitzes argue that NVIDIA's recent performance already includes much of that anticipated cut-spurred growth. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So coming up next week, less than a week away, we have NVIDIA earnings. I'm just going to run down some of the numbers for the audience. We don't talk about NVIDIA as much as we once did, but still, huge influential stock. It's about 6% of the S&P 500, more than 7% of the NASDAQ 100. And I got this from our data team. The implied volatility after earnings is plus or minus 10%. Is this something that you have to adjust for? Is this something you have to prepare for, these earnings from NVIDIA coming up?
I think it's always very hard to position, particularly for one earnings results, given it could move either way very easily, very unpredictable. But what we think is that, we generally like the semiconductor sector. And we think that this is a very strong cyclical and structural thesis. And NVIDIA is obviously the biggest stock in the semiconductor value chain. And I think, it is important to have, a position in that in your portfolio. And I also think that it's just not sensible to overreact to these earnings season. I think it's more importantly, if you have a view that these companies are likely to do well in the long term, just stay invested. And if there's occasion like 2 weeks ago when there was a market sell-off, it could be a good buying opportunity. And we may actually see that again, given how volatile NVIDIA stock is.
So as we approach August 28th, all eyes remain glued to NVIDIA. It's an anticipation not unlike waiting for a sports championship game. NVIDIA's potential $270 billion in free cash flow over the next 3 years, predicted by analyst Ben Reitzes, is enough to rally even the most skeptical of investors. This cash flow enables the company to return substantial amounts to shareholders, making long-term investments all the more lucrative. You've heard the stats, crunched the numbers, and felt the excitement build up like a crescendo in a symphony. Here's the million-dollar, or perhaps trillion-dollar question. Should you invest in NVIDIA before its highly anticipated earnings report on August 28th? NVIDIA's stock may seem expensive, trading at nearly 46 times forward earnings estimates. But when you consider its dominant market position, staggering revenue growth, and future roadmap, the investment case becomes compelling. Its GPUs are set to stay at the forefront of AI technology, and its next-gen offerings could disrupt the market again. Just look at the track record. NVIDIA consistently outperforms not just Wall Street expectations, but their own ambitious projections. Investing isn't about timing the market perfectly. It's about recognizing value and potential for growth. NVIDIA's history of robust earnings and strategic moves makes it a prime candidate for long-term investment. Even if the stock doesn't surge immediately post-earnings report, its future outlook remains golden, thanks to its innovative edge and the trillion-dollar AI revolution it stands to benefit from. As we zoom into the present, NVIDIA's stock sits in a fascinating position. At a time when the Federal Reserve's interest rate decisions usually dominate headlines, it speaks volumes that NVIDIA's earnings report is the main event on Wall Street's calendar. Will you be part of this thrilling financial chapter, or will you watch from the sidelines as NVIDIA continues its exhilarating climb? And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.